if we see some action here. Well, let's just shift focus to the power sector now. Sources tell CNBC-TV18 that around 40 gigawatts of renewable energy capacity remains stranded due to lack of power purchase agreements. At the same time, solar output continues to decline amid weak demand. To discuss this and more, we are now joined by Nikhil, Director and Senior Analyst at Bernstein. Nikhil, good morning. Good to have you with us here. Thanks very much. I mean, I guess this is something which has been brewing for a while, and we've been sort of picking this up in conversations. I think we've spoken about this in our earlier chats briefly. So what does this mean for the companies under your coverage, Nikhil? Let's just narrow down the focus immediately to that from an investor point of view.
Sure. So this event specifically, if you see Renewable, about 40 gigawatts getting retendered, there was a challenge that power demand has been soft this year after 3-4 years of strong growth. This year, due to largely rainfall, power demand has been quite soft. August, September, slightly better, 3-4% growth we are seeing YOY. But due to soft power demand and a huge influx of renewable tendering in the last 2 years, there was a group of tenders where PPAs were not getting signed. So now, given the lack of DISCOM interest to sign PPAs due to low power demand and a big pipeline already signed up, these projects or these tenders were not fructifying into PPAs. Now they'll get retendered. In terms of the implications of this, there's no stranded asset due to this. No one put any hard capital just on the basis of a tender. Without a PPA, no investment happen. So no impact immediately on earnings of renewable developers, but does impact a sort of growth that was expected of them in the next 1 or 2 years on the renewable developers. Just specifically renewable developers are the only ones impacted by this event.
Oh. For companies in the and this is a space you've covered and you have been skeptical, the solar module companies and those kinds, right? Cell module, etc. There's more coming. By the way, our colleague Shireen interviewed Sanjeev Goenka, who's I'm sure you saw. They are setting up. They said, well, in the next 35 days, first capacities come on stream, and they have targets of 3 gigawatts each in cell and module, which the group is targeting. So there's, but specifically there, Nikhil, is there an impact?
So their near-term impact, no. So as you rightly said, we have been negative on renewables and more positive on consequences of renewables, which is transmission, thermal, battery, etc. So within renewables, as you said, solar manufacturing, near-term, it's a phenomenal story for them. The earnings is very strong, largely due to government schemes, especially the PM Surya Ghar scheme, rooftop scheme, and also the PM Kusum scheme for solar pumps. So those are the ones which are aiding their earnings. So if you think FY26 and even possibly decent part of FY27, those companies will see strong earnings. But beyond that, we are really concerned. We see a glut of supply coming. Almost as you said, many people are lining up for IPOs. Every second company we are meeting is looking to set up a solar module and cell manufacturing plant. And that's when we are concerned from a long-term perspective, medium to long-term perspective, that there could be a supply glut and earnings, the ROEs could fall and earnings could compress. So these companies are at peak earnings right now, peak ROE, peak margins due to government schemes. So near-term strong, but medium-term, we are quite concerned.
Nikhil, I can tell you this. When this news popped up yesterday over the last 24 hours, you're the first person I thought of. Because when you read that headline that, it's 40 gigawatts of capacity stranded and no one signing PPAs, I was just thinking about, the thesis you've been building very consistently, and you have raised those issues over the past many, many months now. So going back to that first point, now this, do you think that this is a short-term issue because this year power demand was low and we had a plentiful monsoon, etc.? Or is this a bigger structural issue? And therefore, what would you expect on both wind and solar tariffs as this huge amount of capacity? It's not like 1 gigawatts here or there, right? It's 40 gigawatts which needs to come up for rebidding now.
Yeah, it's a near-term issue. But medium to long term, the heart of the sector is power demand, where we are positive. Because if you look at the new use cases of power emerging in EVs, the cooling need, data centers, power demand growth will accelerate. This year was an aberration in power demand. It should come back to 1x of real GDP. And once power demand comes back, we need to add renewables. There is no doubt about that. The only difference in our view is instead of government aspiration to add about 40-50 gigawatts of renewable a year, we feel 30 to 35 gigawatt is what is more realistic in terms of renewable capacity addition. So we should hit that number in the medium term. But yeah, near term, some of the headwinds are there in contract signing due to low demand and massive.
Okay. And this is happening at a time when there is a lot of talk around nuclear as well, right? Scale up of nuclear. We've seen NTPC starting to make some overtures on that side as well. So again, in the near term, this PPA situation, could it get worse before it gets better? And from a stock perspective, then, which are the stocks which we should watch out for? I mean, you've already mentioned that I think a lot of the renewables you're not very bullish on. But could this be an overhang overall on power stocks in the near term?
So on the first point, you mentioned nuclear, an excellent long-term story we feel to complement renewables. Renewables are not dispatchable. With batteries to some extent they are, but you need either thermal or nuclear to complement renewables. I did visit a nuclear plant in India recently, and it's probably the most efficient way man has made power, is what I feel. Very low land footprint, very low, emissions. So nuclear will be a long-term story. But it won't impact the near-term PPA per se. To make a nuclear plant, it takes 10 years. So even if we start work today, it's probably going to come in 2032, 35 is when the nuclear assets will start coming. And lastly, in terms of stocks, as you said, within our coverage, we continue to like L&T from a power construction perspective. We like NTPC, which is complementary. So it's a thermal plus nuclear plus renewable play. Where we are negative on some renewable developers, where we find the valuations rich. We are negative on solar manufacturing companies, such as Premier and Wari, due to the supply glut that we envisage.
Okay, yeah, and those calls have been fairly consistent, I guess, over the past many months now. Thank you for that, Nikhil. Good conversation and good to get that perspective. So, yeah, let's see. We need to figure out what happens to these PPAs which are not getting signed in the renewable space. Perhaps it will get resolved in the rebids.